Hello, everyone. This is Peter Richardson. I'm your host for the Counterpoint podcast today, and I'm delighted to be joined by Jeff Fieldhack. Jeff is a research director based in the US of A. How are you doing today, Jeff?
Hello, Peter. Doing very well, thanks.
Great. So, some interesting uh, things going on in the US right now. Hope you're staying safe.
Yeah, we are living in interesting times right now. A lot happening, and yeah, the markets are really changing, and yeah, there's just a lot happening right now for sure.
Yeah. So the topic for today's discussion is really kind of looking back at the Q1 market in the US, and then sort of how that is morphing into the second quarter, obviously with the effect of the coronavirus epidemic and what that's doing to the market. And then, we can talk a bit about, how that's impacting on different sales channels. And then looking forward, to maybe coming through this coronavirus period and what the market will look like, as we go through the middle part of the year and into the fall. So, just to kick us off, Jeff, I mean, can you give us a bit of a flavor for how the first quarter looked? Obviously the coronavirus was creeping in during the first part of the year and then became a much stronger reality as we got into the latter part of the quarter. Um, what was the impact on the market?
Sure, these were rough, unprecedented times for sure. Going back to January, the market was a little down. You have the normal seasonality always of January post US holidays, and everyone's broke and kind of getting into the flow of the year again. So it was down a little bit year over year, slightly. And then February, we usually see a bit of a prepaid punch and comeback due to promos within the low end. And this is when usually national retailers get aggressive. Uh, with tax refund checks coming out. And so usually the market starts to gain a little momentum in February. But this February tax season was a little late. And that's just when the coronavirus hit in China. And some of the supply was hurt. So Motorola in the epicenter of COVID in China, volumes went to zero. And we saw in the US the usual supply chain dwindling, but just as that was, we were getting to a point where carriers and national retailers were very low on inventory. March, COVID moved into the US, lockdowns were in place, and demand was crushed. So then everything really slowed, and even though we were really low on supply, it didn't really matter because demand really dropped off at the same time.
Right. So we started off with a supply issue, but that sounds like it was more, if Motorola was affected. I know in Europe, some channels were getting low on Apple products in the February timeframe, but I don't think that was quite the same in the US. So, how would you kind of characterize the difference between, let's say, post-pay and prepay, pre the COVID impact, at least the demand side impact?
Absolutely. Yeah, it was kind of very different. First, on the postpaid side, 80% of stores closed, and those that were open were kind of even telling the public, hey, this is emergency only, only one person into the store, two people at a time. So uh, basically what happened on the postpaid side was if you can wait, if you have a phone that's functioning, just wait. So the churn and switchers, all the marketing was basically put on halt on the postpaid side. If you did have a damaged phone or something, then you could go into a few of the stores that were kind of set up. So each region or metro area had a few stores you could go in and swap out a device. On the postpaid side also, online, this is where really online picked up. It was right in the middle of the S20 launch. There were, even though it was terrible timing for Samsung, you did see a spike in online sales for those who knew what they wanted, could still buy a device. We saw Amazon jump. We saw carrier retail online sales jump. We even saw national retail or carrier stores and national retail growth. On the prepaid side, this is where volumes really were hammered. We had near 40 million workers apply for unemployment. Um, this is a big, strong base of who buys prepaid devices. A lot pay with cash. Um, 50% don't have a credit card, so these are not online buyers. So the prepaid side was hurt a lot. There was one part of prepaid, the government subsidized programs. These are programs like Lifeline or Assurance that subsidize phone use and service. That of course saw an uptick. We saw with unemployment growing, more people qualified for this. So there was a small percentage of the prepaid that did see a bump. And this benefited OEMs such as ZTE and Alcatel and other very low cost handset providers in this space.
Okay. So yeah, I mean, I was reading, uh, I think back at the time that when there were a lot of these people were filing for unemployment benefit, that if you were at the lower end of the wage scale, you were much more likely to be laid off or your job furloughed than if you were in the sort of upper quartiles of income. So I guess that reflects directly into the segments of products that would be most directly impacted.
Absolutely. I think the US government had statistics they put out that 40% of workers making 40K or below were laid off during this period. So it just hammered uh, households that, yeah, were basically under 40 or 50K uh, per year.
So does that mean that the high end of the market was unaffected, or unaffected, much less badly impacted?
Yeah, well, when we looked at the statistics, OEMs such as Apple, because they have such a strong online presence, their volumes were affected a lot less than a lot of the prepaid OEMs, the OEMs that really cater to the prepaid. So, yeah, Apple's decline was much less significant. I think the other thing, maybe obvious, is Apple has such a small portfolio. People that are upgrading usually know what they want, either from having friends that had devices and just such a lower amount of SKUs. They know what they have, so it's much easier to buy online. Whereas prepaid and some of the lower end suppliers, uh, the deals are different. The consumer is not wed to a certain OEM. There are a lot of different options. So you really need to go into the store and see it and have a feel for it and kind of get this explained. So those were the OEMs and the markets that we saw take a bigger hit than Apple and Samsung Galaxies.
Yeah. Okay. So online sounds like it was strongly benefiting during this period. So we're sort of, I guess we're talking now through the end of Q1 into Q2. So that kind of March, April period. And I guess April was probably the most severely impacted. Is that fair to say in totality for the market?
Yeah, absolutely. This March, things started to really close down. April, things were shut down. Um, at the last week of April and then into May, the US government's stimulus checks started to go out. And then we actually saw the recovery start there. And then mid May, more of the stores started to open, more of the states relaxed lockdowns. So that was the kind of the second surge of getting slightly more back to normal. So March was down. April was the trough in the U.S. May bounces back a little larger than March. June will certainly be bigger than May, but will still probably be down slightly year over year, as there's still such large unemployment, and consumers, if they can wait due to uncertainties, they're still putting off big device purchases.
Hmm. Okay. So online becomes a bigger percentage of sales during this period, but is that indicating a change in behavior, or is it just that, online was not closed down, so by default it kind of looks better? Or is there likely to be a kind of a longer term change here that more people are buying online?
Yeah, great question. I think the answer is yeah, certainly, because Amazon and digital sales were still open. It wasn't like a total lockdown like we saw in Brazil or India, where nothing could be sold. Yeah, the online sales picked up. So yeah, these consumers were buying. I think it slowly shifts back to where it was. Online sales drifted all the way up to 33% in April. I think it drifts back down to 15, 16%, where it kind of was over the past year, with maybe one exception. Maybe we get a little bit of bump from consumers that purchase a device online, but then they go into the store to pick it up. There's still a large percentage of consumers that like the familiarity of going into the store, the security and ease of handing in a used device, and they are certain it gets wiped, and the security aspects, they don't have to deal with selling it on their own. You get your SIM swapped, and your contacts switched over. A large part of the base still feel comfortable with that aspect of working with a carrier, and we don't see that changing. The other thing we're tracking is US carriers and national retailers. They talk about going digital, saving money, and being competitive. They don't want to lose sales to Amazon. They want to control the customer. However, it's still t- tough for them. You know, they want consumers still coming into the store where they can upsell insurance and accessories. So they want to go digital on the easy things of upgrades or people that know exactly what they want. However, they still like to control the customer, that they can, get these add-ons and feel like they can serve the customer better.
Yeah, and I think that pattern is what we're also seeing in Europe. So, um, I think if I take the UK as an example, which is the market in Europe that I know best, the operators, carriers, if you will, over here have had for quite a long time a very sophisticated omni-channel approach. So they don't really care if you buy in a physical store or online or through the call center. To them, it's all the same. They retain you as a customer or get you as a new customer, but they do like you to go into the store to pick up a product because, as you say, there's a much better upsell opportunity for some of the value add elements, which actually produce quite a nice margin. But at the same time, what I think just through this recent period, what some of the operators are seeing is, or what the calculus that they're making is, if they can, in their words, optimize their retail store footprint, which means closing down some stores or limiting their partner stores, that they can overall end up with a more kind of profitable transaction on a customer by customer basis. So there's probably going to be a net drift towards more, what they would call digital sales, and a bit away from the physical stores. But I think that mixed pattern will still remain, after the coronavirus worst of the coronavirus crisis is done.
Yeah, really agree with that. The ebb and flow of store closures and openings always evolves in the US. Most recently, Verizon's pulled out of a couple of the big national retailers and goes it alone with their own stores and dealer channels. They get slightly better margins on that. So I think they always keep that in mind between a bit higher digital sales and then yeah, owning the customer through their own channels. They can eke out a little larger margin, and then also, as stated, there is a large percentage that will always remain online or offline because all the things we mentioned about prepaid, but there's also a very large base of family plans in the US. And coming into a store and picking out for an entire family is a lot easier going into a store because you might want to be picking out the best deal for maybe your kids. They're not always getting a premium iPhone or Galaxy device. Plus, there are a lot of promos on family plans and that are done uh, in the that last sale that is done in a store that's actually easier than online. Of course, a carrier could in an instant make online deals better to try to mold behavior, but surprisingly, they haven't done that. There are small things like small activation fees that may be waived online, but the best deals are usually not seen online. They're actually still in the stores. So that continues to, mold behavior to where the majority still goes into the store.
Hmm. Okay. I mean, one of the other uh, big trends that's been taking, or at least starting through this, last, well, I guess over a year now in the US, but may have been impacted a bit by coronavirus, is the shift towards 5G and the rollout there. So, what are we seeing? Specifically relevant relative to 5G. I mean, has there been a reduction in the promotion of 5G offers during this period, or was it never particularly sort of strongly pushed, until 5G iPhone comes out?
Yeah, I think there are a couple moving parts here. First, some of the Verizon, AT&T, who are the most aggressive with millimeter wave, that is a main part of their 5G network. During COVID, that network build out slowed or even almost came to a halt because they need to put up, it's such a densification of the network and getting the permits from the government and the cities and that actually slowed down. Whereas T-Mobile and AT&T on their low band, that seemed to still continue. We still saw rollouts continuing in on the low band where just towers need to be refitted. We were told by the carriers, hey, this was still safe. It was one and two person workers still updating towers. So that continued. I think overall the carriers kind of took a pause in general on marketing since most of the stores were closed anyways. And now as the markets are opening back up, now we're seeing much more aggressive on the Galaxy S20 launch, which happened right in the epicenter of it all. We're seeing buy one, get ones, and much more aggressive in the summer with the graduation promos and the Mother's Day, Father's Day promos of the summer. We also saw on the LT side a quick point on Apple, the SE. has really been accelerating, very popular, and national retailers are using that to just get people back in the stores with big offers. But back to 5G, I do think now late summer on the Android side, we'll see a bigger push in promos, but then it'll really hit in the fall when Apple launches, because then you won't just have carriers competing. You'll have that the competition between Android and iOS, and probably a lot more promos that the carriers might have kept a lot of those marketing dollars of that they didn't use now, that they'll even be using full force in Q3, Q4.
Yeah, and I think it's very likely to be the same in Europe. 5G's been available in a few markets across Europe for many months, but it hasn't really been pushed. And I think a large part of that is because without Apple in the market, you haven't really got a market. Um, in the UK, 45% of the install base is Apple. So, if you can't offer an Apple product with 5G, then you're effectively you've got nothing for that 45% because it's unlikely they're going to move. So yeah, I think we'll see the same effect over here. As that product comes out, then that's going to unlock a lot of marketing dollars, and it should also align with network builds, which have been, as you say, a bit upset by the needs of physical distancing and obtaining permits, and plus you have this crazy conspiracy theories about 5G, which has impacted a bit in various places. Uh, Hopefully that gets washed away, but there are still plenty of flat earthers out there, so who knows.
Absolutely. I totally agree. And here, even the iOS installed base is even higher. So, absolutely couldn't agree with you more. Without Apple in the game, you're not full throttle on moving users over to 5G.
So just to wrap up, Jeff, what do you think the overall market is going to look like for 2020? I mean, we had this big hit. As you say, it's sort of bouncing back now. Are we going to see a rebound? So a kind of reversion to the mean, you know, that we had as we went into 2020. Are we going to kind of get back there, or is there going to be a material impact to the market size for the overall year? Do you think?
Yeah, I think overall, obviously, we're going to be down in the US. Probably of 11, 12, 13% is probably a solid range of what will be down. However, we're seeing an uptick in really getting back to normal quickly, and I do think Q3, Q4, or Q4 especially, will be even a bigger quarter. We have a lot of pent up demand of purchasers that kind of have been waiting, that then will purchase and upgrade in Q4 because they've just been waiting to upgrade. And then of course Apple. Um, what we learned with the SE launch is there's a lot of pent up demand for Apple, and there are a lot of old iPhones out there. The SE adopters haven't. We don't really think that they're cannibalizing the high end. It's just that there were so many old iPhone 6s and 6Ss out there that upgraded to the SE. And I think we're going to see a big upgrade when the 5G iPhones roll out, because there's a lot of pent up demand in people with 3 and 4-year-old iPhones. So I think Q4 will be aided by both Apple, a little bit of pent up demand from these COVID months, and then a lot more aggressive between the carriers and the OEMs all competing to for that Q4 upgrader. And maybe one last comment is um, these iPhone users are premium subscribers. On average, they're higher ARPU for the carriers, and no carrier wants to be left behind on premium iOS subscribers. So look for them all to, yeah, go very aggressive in Q4 when these iPhones launch.
Great. Should be an interesting second half of the year. Something we've been looking out for some time. Great. Thanks, Jeff. Really appreciate your contribution today.
Thank you, Peter.
All right. Thanks, everyone, for tuning in this time. And keep an eye out for the next edition of the Counterpoint podcast. And we'll see you again next time. All right. Goodbye now.